Welcome to Global One Media Stocks to Watch. I'm Michael Swido. I'm speaking today with Farhad Abbasab. He's the chairman of a mineral exploration company called Millennial Potash that's focused on a project in the African nation of Gabon. Farhad, great to see you again. Welcome back to the show.
Thank you, Michael. Great to see you as well.
All right, a quick primer for viewers who may not have seen your previous interviews. Potash is a mineral that's formed during the evaporation of ancient seabeds. It's a great fertilizer, which means the market for it is huge. Now, until recently, your company owned 51% of the Banio Potash project, though it's always had a goal of owning it outright. The original specs for this deal outlined a series of milestones that you need to meet in order to increase your stake, which you've just done. It's now up to 70%. So tell us a bit more about this. What did you have to do? What did you have to accomplish to gain this additional share?
Michael, we've been developing this project in a record time. We announced the deal in March last year, and since then we've done quite a bit of work. We've basically taken the company from very early stage, and we've drilled, and we've put out our maiden resource estimate in January, and the preliminary economic assessment came out last April. So we've done quite a bit of work in less than 12 months or so. And some of these milestones were directly linked to earning into this project. So in general, our model is to earn into the projects. In other words, going through option agreements with many of the projects we've done in the past as well. So this was no different. And in order to earn into this project, first we had to make a certain payment in the form of cash and shares of Millennial Potash early on, and that gave us 25% of the project. And then we had to file a maiden resource estimate, a mineral resource estimate, which was done in January, as I mentioned. That earned us 51%. And then, of course, on completing and filing a preliminary economic assessment, we've earned 70%. So in about 12 months, we've gotten to 70% of this project. And of course, our plan is to earn all the way up to 100%.
I like the way you put it, that you have to earn into the project. I think that's a great model. You also mentioned that you all did that preliminary economic assessment. I'm curious, I'd like to get an overview of that. How much does it indicate that the project could be worth?
So look, Michael, the project is huge. I mean, just based on 2 drill holes, we have over 1.7 billion tons of resource, and that covers barely 1% of the property. The property is over 1,200 square kilometers. So the PEA focused on producing 800,000 tons of muriate of potash, which is standard potash, and it was using solution mining approach as well, so which is basically a very environmentally friendly and low cost approach, and that yielded very strong numbers for us. So we're looking at after-tax IRR of over 32%, after-tax NPV over $1 billion. So you can imagine our excitement when all these numbers came back, not only because of those numbers, but also because of very low cost structure. And if you look at our market cap now, we're basically trading around 1% of our NPV, after-tax NPV. So it's a huge upside from here as we see it.
All right. So what is the net present value if you had to put a number on it?
So NPV after tax, using 10% discount rate is over $1 billion US dollars. Okay. So it's a very, very large number.
Yeah, definitely $1 billion. That is a big one. You mentioned that this project has a low cost structure. Can you tell us a bit more about that? How did you figure that out?
So, Michael, we knew that this project was going to be low cost for 2 reasons. A, we've seen the historical data before when we started drilling. So the potash horizons were very thick, around 30, 35 meters. But once we started drilling, we extended the thickness of potash horizons to 70 meters. So basically double the thickness. So now we stand at a very thick potash horizons of about 70 meters at the thinnest part of the project. So, we've drilled in the northern part of the previously explored part of the project. And then we go south based on historical drill holes as well as seismic. It looks like the thickness of potash may actually double from 70 meters up to potential 150, 160 meters. So, but just based on 70-meter potash thickness and using solution mining, we had very low cost structure. So in terms of CapEx, we're looking at $480 million for 800,000 ton a year operation. And our operating costs are one of the lowest in the world, even compared to current large low cost producers such as Nutrien out of Canada or Uralkali out of Russia. we're still lower than them at $61 per ton. So it is really, this PEA put us on the potash map, so to speak, in terms of our cost structure and economics.
All right, well, it is great to be on the map. With a low cost structure, can you give us a number for the sort of margins you're expecting?
So look, current potash price is trading at in quite a bit of a range. So from about $310 in $310 per ton, that is, in Brazil, all the way to probably 380 euros per ton. So let's say $400 per ton in Western Europe. So producing potash at $61 per ton, regardless of where we're going to be selling this product, whether it's going to be in Brazil or Western Europe, or most importantly in Africa. In Africa, by the way, the prices are closer to $400 per ton. So we're talking about over $300 margins at the current potash price.
Okay, those are good margins. We've mentioned your project is located on the coast of Gabon, just north of the Republic of Congo. And you mentioned Brazil. And from what I've seen in your presentations, you're expecting your primary markets to be Brazil, Africa, and Asia. And that gives you a leg up in terms of geography and geopolitics, right? Because currently most potash is produced in Russia, Belarus, and Canada.
You're absolutely right, Michael. I mean, the two things there. First, our proximity to major markets such as Brazil, of course, which is the largest importing nation on earth with about 12, 13 million tons of imported potash per year. And then, of course, the focus is also Africa itself. As a continent, the African nations import over 1 million tons of potash a year. Some good years they import over 2 million tons a year. So that is going to be our primary focus, to place as much of our product in Africa as possible, because we're there. So we want to become the first African potash producer and also place most of our product in Africa. So that makes a lot of sense. But you're absolutely right on the geopolitical aspect of this industry. Basically 70% of the world's supply of potash comes from just 3 countries: Canada, Russia, and Belarus. And considering the situation in Europe right now with Russia and Belarus, of course, the importance of projects like ours has gone up dramatically in the last couple of years, because we're in a so-called neutral area and we can supply our potash to critical areas, as I mentioned, of course, Africa and Brazil, but also we can sell it to India, China, and eastern seaboard of the United States.
Okay, really interesting. And I mean, that geopolitics, I know people want to diversify away, certainly, from anything reliant on Russia and Belarus. So, definitely that it is a plus for your project. And as you mentioned, it is moving forward really quickly. In less than a year, you built an exploration camp, you've drilled exploration holes, and you issued that maiden mineral resource estimate. I'm curious, given the estimates look promising, are you lining up any customers yet to lock in future revenue?
Michael, yes, we've been in already talks with at least 3 different parties from 3 different parts of the world as well, interestingly enough. So on offtake specifically. So these parties, some of them are actually producers, others are producers, meaning fertilizer producers. Some of them are actually traders. And we're obviously talking to all of them to see how we can actually diversify our off-takers as well. I think that will be important for us down the road. And we're also looking at off-takers or at off-takes as potential source of capital down the road as well. So this PEA has put us on the potash map in terms of not only the strength of the project, but most importantly, the viability of the project for potential off-takers. Hence, we've been engaged by some of these groups only after PEA was released. So that's very important for us. Because right now they believe in the project. And again, our main focus is Africa still, potentially again selling some of it in Brazil, but also in India and maybe in China. So it will be the function of who we're going to be striking a deal with, meaning that we don't look at an offtake as just a pure trading agreement. We also look at offtakes as I said, another source of capital. We've done these things before with our potash project as well as some other projects. Whereas, an offtaker would sign an offtake agreement and invest in the project or in the company as well. So that's how we want to structure our potential offtake in coming months.
Okay, and just for someone who doesn't quite know the lingo, offtake, that's essentially a client that you're locking in now before the project is complete, right?
Correct, Mike. So that's a good point. So an offtake is basically an agreement to sell your product today down the road. So in other words, we don't have production yet, but we might have an offtake, for example, for half of our potential production of 400,000 tons, for example. And that will give the right to the off-taker to buy that product at a certain price at a starting, when we start our production. So that's why, in lieu of that, we'd like to get some sort of investment in the project or in the company. And we think that it helps us actually expedite the entire process, but also helps them to risk the project going forward. So it works both ways, and it actually benefits, obviously, both an off-taker and the producer.
Okay, makes a lot of sense. At the top of the segment, we talked about how you've been increasing your stake in the project incrementally, and your goal, of course, is to own it outright. So I'm wondering, what's next? What milestones do you need to accomplish next in order to own 100% of the project?
So, Michael, I'll talk about what our program is going forward, and then exactly what kind of milestone we need to accomplish in order to earn up to 100%. So we will be drilling further on in the project, in the northern part of the project. Basically, it will be step out drilling from the previous 2 drill holes that we've done, and that should increase or expand our resource, significantly. That will allow us to go into bankable feasibility study later this year. So that's our plan. And then, of course, along with bankable feasibility study, we'll do all the environmental works. The EIA program will be started at the same time. And for us to earn 100% of the project, we need to basically complete bankable feasibility study and file it and make certain payments again to the vendors. And that will earn us 100%. And the plan is to basically start bankable feasibility study by the end of the year and completed by the end of 2025. So by the end of 2025, we expect to earn 100% in this project.
Okay, so continuing that pace you've set, which is pretty fast. Let's take a look at
Exactly.
the investment side of the equation now. If we take a look at your stock, shares of Millennium Potash are trading well below their level of a year ago, but the stock is up a good bit as well, above its 52-week low. So given this range, as well as the milestones that you've met, I'm curious, why do you think now would be a good time to invest in the company? Why is it a stock to watch?
So, Michael, for 2 reasons. One, as I mentioned already, when you look at the economics of the project, they're stellar. Our after-tax NPV is over $1 billion, and it's a US dollars, but we're trading at around 15 million Canadian dollars of market capitalization. So, in other words, we're massively undervalued compared to our NPV. So we should be trading around at least 4 or 5% of our NPV, but we're not. So I think there's an opportunity right there. But also, after both the initial drill campaign and, of course, the PEA, a lot of these technical and economic risks have been, taken away and have been mitigated dramatically. So that's why we think that there is a huge upside potential from here. And in the next few months, we're going to have quite a few milestones to hit, including potential expansion of the project after drilling, and of course the offtake agreements that we've been talking about, potential strategic investments, hopefully in the next few months as well, and then going into bankable feasibility. So we're talking about really taking the project from early stage to the point where it's becoming a real project with a lot of these risks mitigated. So that's why we think that in combination with a very depressed stock price is a real a recipe for significant upside potential at this point. So this would be, I would say, especially in the next few weeks and months, probably the perfect time to invest in Millennium Potash.
All right, I'd like to look at the financial side of the equation now. Your company recently raised $2 million, if I understand correctly. How are you planning on using those proceeds?
Yes, Michael, we've completed most of that financing already, and the plan is to actually use most of the proceeds for further drilling. So as I mentioned earlier, we're going to be drilling 2 more holes, at least 2 more holes in the northern part of the project to basically expand our resource. So most of the funds are earmarked for that. And I also have to say that, management, has put, quite a bit of into this financing. They've taken a big part in this financing as well. Almost 25-30% of this financing has come from the management and the board. So again, that shows our very strong confidence and belief in the project. I mean, this is not the first time. Every time we actually raise capital, the management takes a big chunk of that financing. We control over 30% of the company. And that's why we think that, this is the right time as we're looking at potentially a much larger resource. And then, of course, going into the bankable feasibility study later this year, as I mentioned earlier. So that's the main purpose of the financing.
Yeah, always good when you see management putting their own money on the table.
Absolutely. That's, I think, very critical.
All right, well, excellent. Thank you for that take on it. It's been great speaking with you. I hope we can do one of these interviews on a site visit in Gabon one day to get an up close look at the project.
Absolutely, Michael. That would be great. I mean, that's the plan, actually. What we're trying to do is probably by the end of the year, early next year, we'll have a site visit for analysts, for some of our investors, et cetera. And that would be great, actually, to have one of you guys, and including yourself, Michael, visit with us, and maybe we'll do the interview right on site.
All right, we'll keep that in view. And in the meantime, once again, great speaking with you. We've been speaking with Millennial Potash Chairman Farhad Avazov, and you've been watching Global One Media Stocks to Watch. I'm Michael Swito.